Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So another really exciting week. Monday, we got the washout sale that we expected, gap down, and then we were kind of off to the races, off to a volatile week. I made up a list of the top 10 moves higher for in one day by the S&P 500, and going over history, this was pretty interesting. So this last one was made number 9 on the list, so it was a 9.5% move on one day. That was Wednesday when Trump decided to get rid of the tariffs. And if I back out here, so this is ran this through ChatGPT. Here's the top 10 biggest percentage moves in the last 100 years on the S&P 500. So if you want to pause the video and read through this, you can. And this was the reason that Mr. GPT gave for them. But what was really interesting about this, so I'll start at the first one here. So the one on Wednesday, it shot up, right? This one back here was during the Charlie 19er sickness, right? And dropped back down. So this ended up being a pretty good time to buy, right? This one was the number 10 on the list. And after that, markets basically just went up. The yellow ones I put as far as color patterns here, you'll probably put together this pattern pretty quickly. So we go back here, great financial crisis. This one-day return was up 11.58%. Another one shortly after it was up 10.79%, right? But it got lower, okay? So if you bought on those big up days, right, it ended up going lower and quite a bit lower. It may not look like that much on the chart right here, but you know, that's a pretty good correction, 30%. Now, to get back even further, we got to go back to the 1930s here to really see what some other moves were like here. So we could see in the 1929 crash, it had a one-day up move of over 12%, but it got significantly lower. That was not the time to buy, right? Later on in 1931, a 12% move in one day, still not the bottom. Then another one, 11.8% move to the upside in one day, still not the bottom. These two right here were decent times to buy, although if we go intraday here, it did get a little bit lower than those days, but still, you know, 3 out of 7 times it was basically a good time to buy. Not this one here either, back in 1939, just tanked after that. I mean, it was, you'd be in this thing for 3 years, 2.5 years, before you finally started to see a positive return there, right? Actually, no, it'd be even lower than that, 39, and then kind of got even around 43, so even longer, 4 years. So generally speaking, when we have these big volatile moves up like this, more often than not, it's going to correct more than it already did. And I don't think this time is any exception. I think that, you know, we could see right here with this retracement, this Fibonacci retracement, it traced almost perfectly down to the 61.8 and then shot up. But we can see that more often than not, we're probably going to get a correction back down here. Now, a lot of those, especially recently, even if you did happen to buy that spike, you know, it may have gotten a little bit lower, but within a year or so, you were way in the black. You were already in the green. So if I go back here to the GFC, even if you bought these, it wasn't the bottom. It still had a ways to go, but within a year, you were up. Okay, so I kind of expect something similar here. There's a part of me that thinks that it's going to be more like the dot-com bubble, where this thing is just going to get washed out and it's going to take a long time. But I do not think that this was the opportunity if you're going to do the S&P 500 to get in. And I think it'll get cheaper from here. But these are the points that you want to watch. There's a 50% retracement right there around 51.26, and the 61.8 is at 48.89. So those will be the points to watch. Alrighty, and the Dow Jones Industrial Average is up for the week. Oh, S&P was up 5.7%. Dow Jones Industrial Average is up 5% for the week. So also recovered after the tariffs were postponed, air quotes, and also hit pretty close right in here to the 61.8% retracement. Dow Jones divided by gold. So we talked about this with Stephen Pete last week. If you guys missed that episode, check out the newsletter. The links will be in there. And I haven't looked at this one in a while, but they brought up a really good point that we're coming up on kind of a double bottom right here. So I think we'll probably get some kind of bounce here. Maybe like, the Dow will outperform gold on a short period of time. But eventually I agree with him that this thing is going to go down and correct. And, eventually we'll probably be able to trade, 1 or 2 ounces of gold for the Dow Jones, for one share of the Dow Jones Industrial Average. And let's see, the gold outperformed the Dow Jones by 1.8% this week. Or thought of other way, the Dow Jones underperformed gold by 1.8%. So skip through real quick on the Mag 7 here. So if you're new to the show, it is fantastic to have you. Our basic MO here is going to be to sell rallies in general equities and in the tech sector and communication sector, and buy pullbacks in commodities because we think that there's going to be a super cycle in commodities. And so this is basically a wealth transfer. It's not going to happen overnight, but we're watching it happen in real time here. Gold is making all-time highs and the tech sector is slowly starting to roll over. So here's NVIDIA. This one is up 18% for the week. And then Apple is up 5%. Microsoft is up 8%. Amazon is up 8%. But look at this. They're all kind of in a downward cycle here, making lower highs and lower lows, right? Google is up 8% for the week. I got a question on Head and Shoulders. I'm sorry, I don't remember who it was, but I'll just draw it for you here. So basically, if you put a horizontal trend line right there, this will be the neckline. And then we have the left shoulder and then head. And then he's asking, is this coming into a Head and Shoulders pattern? Not really sure. We'll wait and see if it ends up doing that. Then yes, that I think is a valid Head and Shoulders. Generally speaking, you get a little bit higher on the head, but whatever. This stuff isn't exact. And if this irons out, we still have a third of the pattern to go here. This could just go down and it doesn't mean anything. But yeah, so far, I think this is fairly valid. And then it will go to the downside. And the way we measure that would be we would take the head and measure down to the neckline here and then drag it down. And that would give us a downside target here on Google of around $88. If this irons out, there's a whole lot of ifs in there. All right, Meta is up 8% for the week. Same kind of thing, lower lows, lower highs. Tesla had a little bit of a rebound here, kind of a little double bottom here. I saw some traders talking about trading this. I never did. That one is up 5%. And Palantir, same kind of thing in a downward channel, just making lower highs and lower lows. This one is up 20% for the week. And the dollar, bonds, and yields. Okay, so the dollar, this one dropped absolutely out of the sky. Really impressive, down 3% for the week, which is a real anomaly for the dollar. So we probably get a short-term bounce rate here, but look at what's happened. If we go back to the previous time it was at this level was in July of 2023, and it even pierced that level. So that one little last bit of resistance right there, it broke through that. Really interesting. I think that this is probably going to have a little short-term bounce here, but I see this going lower. The dollar's getting weaker. It looks like Trump is getting what he wants, other than the what happened with the bonds. I think Scott got in his ear on that one and basically asked him if he wanted to be known as the guy who created GFC 2.0, and he said no. So he reneged on the tariffs and postponed by 90 days. But really interesting here on the dollar. Yeah, I'm excited to see what this happens. I'm kind of 50-50 on this. I mean, piercing the bubble, I don't think it'll happen initially, but you do have low RSI, low technicals here, but the MACD almost looks like it's going to go lower. So I think if I had to bet this, I would say it probably goes up a little bit on Monday, but I think we finish even lower next week. We'll see. Syme says, love this channel, Steve. Thank you for your hard work. Every day is a school day. I prefer to think of every day as a day at school, but we're always on recess. So tomato, tomato. Thank you, Syme, for the feedback. All right, now, U.S. government bonds 10-year yield. This is really exciting. Okay, so we saw recently that stocks got sold off, right? And remember, the way bonds work is, so this is showing the yield. You look over here and it says 4.49%, right? We'll call it 4.5. As yields go, they're inversely correlated. So if a whole bunch of people go and buy bonds, what's going to happen to this yield is it's going to go down like it did right here, right? And what that means is there's a whole lot of demand for it, so the yield doesn't have to be as high to entice people to buy it, right? So the yield goes down. If people sell a whole bunch of bonds, then it does like this. The yield goes up because now people need to be enticed to get those bonds, so the yield has to go up to entice more people to buy it, right? So basically what happened here was stocks were getting sold off and bonds were getting sold off at the same time, which is kind of an anomaly. And very, very strange. So I think this is why Trump backed off on his tariff package. You know, and I asked Rick about this, and he thought there's a possibility that the government could be losing control of the bond market. And, you know, we might have the beginnings of a liquidity crisis here. So why did this happen? Now, this is just my opinion. I'm just pontificating here. But my opinion is that hedge funds are getting margin called. So anyone here that has an brokerage account where you have options available to you, you know that, you know, you have a brokerage account and you're approved for options, you also get approved for margin, right? So you can bet money essentially that you don't have, right? Well, if you're a hedge fund, you can do that on a massive scale, right? You know, and I personally don't trade on margin, you know, but these hedge funds do. And let's say they're looking to make 3% on one of these bets, right? Well, if they run margin on this, if they leverage it, they can make 10 times the bets that they actually have the cash for, right? So instead of making 3% on a bet, they could make 30%. Or if they run 20x leverage, they could make 60% instead of that 3%, right? I think we're setting up here for possibly another Silicon Valley Bank and Signature Bank type failure. Remember what happened back in 2023, right? And that's basically like, that's when the Fed came out with the BTFP, the Bank Term Funding Program. Who here had that on their bingo card, right? These guys have a lot of tricks up their sleeve. I think if something gets a little hairy here, they're going to come up with something similar. I don't know what, but this is where I really like having cash. And apparently, I think that's what happened. I think these hedge funds got over their skis and they got margin called and they had to sell whatever was in the books, which is why a lot of really good stuff came down, even gold, right? So in times of financial crisis, usually gold does really well, and now it is. But for a split moment there, even gold was getting sold off. So anything that has a bid gets sold off, and I think that's what happened. And we'll see. I don't know. But remember this episode, and I think that there's another one of these little moments coming. We'll see. You know, maybe the next week, 2 weeks, 3 weeks, we'll see. Time will tell. All right, the 2-year yield is up by 9%. So the bear flag played out on this one, just like on the 10-year. It dropped down, then shot right back up. And the 10-year yield minus the 2-year yield kind of got out of this little channel that we've had drawn here forever. It popped out of it and then came right back down. So I anticipate that it'll continue to rise. And but the spread right now is about 0.5%. 1 month treasuries are still paying 4.3%. So the cash that you have in your money market account, that is what it is paying, or they're probably skimming a little off the top and then paying you the rest, but that's what they're getting. They're getting 4.3%. And let's see, LQD. Esprin says, thanks, Steve. Crushed it today on my LQD puts, up 500% today. Took some profits today, had some May 16 puts. So I said, wow, that's very short duration, because I went out to October on these things. And he said, yeah, I went short duration because of the tariff announcement last Wednesday. Good on you, sir. Well thought out. I didn't think of that. Should have, but did not. Anyways, it looks like I got in at just the right moment here, literally the day before it happened. So I think right now I'm up 500-600%, something like that. But I hemmed and hawed a long time about selling these things. And I was talking with my buddies, my trading partners, and basically decided to keep them. And the reason is I got a strike price here in 99 and 100, which is still a ways off. We're at 105 right now. My whole basis for this is a Charlie 19er type event, the event that I was describing with the Signature Bank and Silicon Valley Bank, something like that happening. If something like that happens, if the corporate bond market implodes, 600% is going to look like child's play. And I didn't quite get my full 0.5%. I only got 1/4% of the portfolio in this as a hedge. So I don't have quite as big as a position as I wanted. And I think I'm going to have to let this one ride. If this goes to zero, I'm okay with that. I'm okay with, letting this win get away. I'm playing this for the big hedge. I'm playing this for the massive Charlie 19er type event. And this is the level right here that I'm doing it at, because look at the technical support that we have right here. If it gets down to this point, I'll sell half. So if then statements, if it gets down to the $99 level, I will sell half. And if it goes beyond that, then I'll decide as we go, right? But that's the way I'm playing this right now, is the LQD. And Moose says, Steve, the bid ask on LQD options is very wide. How do you go about getting a good price on the options? I'm afraid, Moose, that this ship may have sailed. We were talking about this for a while. I finally got in just barely, and I don't know. Basically what I did was, the bid would be $15 and the ask was 40, right? So I would put in 15, hit enter, nothing, then a modify order, 16, enter, nothing, and I just kept going until it finally hit. And these contracts hit at $30 and $43, and now they're several hundred. So, I think that ship may have sailed. If this comes back up, maybe you'll get some action in it. There's not a whole lot of volume in here. There's not a whole bunch of people that trade these on options. So, I don't know. I would just keep watching it, and that's basically what I did. All right, and the Canadian dollar here, this was kind of interesting. So as the US dollar got weaker, the Canadian dollar got stronger. We could do an inverse of this, but basically this is how many Canadian dollars it takes to buy one American dollar. It takes 1.38.5 Canadian dollars to buy one American dollar. So you can kind of see the difference in the currencies here. That was Arthur. He wanted to see that one. And gold, man, just killing it. Up 6.9% for the week. So we got another new all-time high in gold. So in the futures market here, it got up to $32.63, $3,263 for 1 ounce of gold. I thought that this would retrace a little, and it looks like I was right on Monday and then just wrong the rest of the week. So I actually moved up these support bars, if you want to call them that. So I now think that this yellow one right here, I see support at 2,970 to 2,870. Seems pretty. Seems like it's got a decent amount of support. I think odds of it hitting down there are probably 80% or so this week. And then I moved up the kind of stink bid-ish area down here at 2,700 to 2,800. So kind of tight here in the range. That's where a lot of the price action is, though. And then coming back down here to the 2,400 range, 2,450, somewhere in that ballpark. I think the odds of it hitting down there are probably closer to 10%. Maybe this green bar up here at the 27 to 2,800 might be 30%. I still think we're going to get a correction in gold, although I've just been wrong for a couple months. We just get these little blips and then nothing, right? But yeah, as this continues to go up, you got to keep moving your support lines up as well. All right, and let's see, where are we? Oh yeah, someone asked me in the rule class when I thought we would have a correction in gold, and I said a month ago. It's just continued to go wrong. Maybe this is going to do the least likely outcome, and it's just going to go parabolic to 4,000. I don't know. But as far as next week, it actually looks like it's probably going to go up a tiny bit. Okay, gold divided by the S&P 500. Gold outperformed the S&P by 1.1%. Got a little bit of resistance now, and at the 0.67 ratio up there. So we can, there's a fair bit of resistance right now, so it wouldn't surprise me if the S&P outperforms gold a little bit next week. But after that, next real resistance we got is at the 0.67 ratio. And CEF, physical gold and silver on the stock market. If you're new to the show, this is where you want to start in your precious metals portfolio, is with CEF. It's up 7.9% for the week. So just blasting off here. Absolutely incredible. You'll notice that a lot of these red and yellow lines as we go through these, I've adjusted these now. We've had some re-ratings and I put new lines on here. So the red line means this is your starter position, or at least what I would do. You know, I'm not a financial advisor. This is not financial advice, but where I would put, if I had nothing, where I would put my first limit order for a starter position. Maybe you bet, 10, 15% here. And then on the yellow one, you get a little bit more aggressive, right? And you bet, I don't know, 25, 30% right here. And then you put your final bet in to bring it up to 100% down here on the green line, right? The green line is unlikely to hit. That's what we call a stink bid. But if it does, it's a really nice, neat moment because you get it super cheap. But it's probably unlikely. The red lines are, I look at them as very likely to hit, is probably 8 out of 10 times, maybe 80% of the time it hits those. All right, so 2650, 25, and then 2360 for CEF. And PHYS, physical gold on the stock market, moved the red and yellow and green lines as well. I think I just moved the red line on this one. So red line 2250, yellow 21, and green is at 20. And GDX is up 19.2% for the week. So I took some profits on this one and put them into something I will show you here shortly. But just massive run here on GDX. And someone asked me if there's a cup and handle here on GDX long term. And I'm not really sure. Maybe you can kind of tell me which one you're talking about. I think because you said going back over a decade. So I think you're talking about this right here and negative. And here's the reason why. So what you want is you want a cup and handle is a continuation pattern. So it means that the stock market is going up and then you get your cup and handle and then it continues to go up, right? So it's continuing the pattern. This one went up, so okay, go into the pattern and then you start to form your cup, but look at how far down the cup retraces from where this lows. This isn't a continuation pattern anymore. This is a reversal in the pattern and now it's going back down. So typically when you get these patterns, you don't want it to retrace more than 50%, and it retraces to 100% and even lower. So you got to have a cutoff somewhere, and that's it. So that's one. Also, let's forget this and say that this price action continued going down like that, and you didn't get that pattern right there. And let's just say it went right here. This handle retraced way more than 38.2. And the cutoff would be 50%. It retraced like 70% or something. So way too far for that. Yeah, there might be a little cup and handle right here. Actually, now that I'm looking at it, yeah. So like maybe a little one right here. Okay, so we got this right, and then there's the handle, and then off, right? Okay, so we can measure this from the bottom to the top, and you got about $9. Okay, actually I'll use this tool so it's a little bit easier. We can just bring it right back up. Okay, so we'll call it 9 and change there, and then we bring it up. We will shrink that a bit and get a target here of, what would that be? That would be like $52. So there might be a couple bucks left in this. Maybe I sold a little bit too early, but yeah, you got to pay yourself at some point, So anyhow, hope that helps with the cup and handle pattern. And GDXJ is up the same, 19.2%. So I don't see any buys now. I mean, if you want to take some profits, I wouldn't shake a stick at anyone doing that right now. Next level of resistance for GDXJ is going to be 63.25, just lining up with some highs back here. I think that's the all-time highs, if I'm not mistaken. Nope, not even close. So we got a ways to run here in this one. This is going to be super exciting. And Franco, Nevada, up 14.6% for the week. So 2 weeks ago, I said, you know, if you want to take profits, now is a good time. I'm kind of glad we didn't, because I don't see any buyable pullback right here in Franco, Nevada. Let's say we sold up here at like 158, 160, and then it comes back down here to 140. There's not really any pattern here that would make you think, oh yeah, now's the time to buy again. So I adjusted the lines up. We had the green line down here at the stink bid of 115 forever, because for, you know, a year and a half, that was an awesome buy line. That ship has sailed. First entry point here at 150, and then your next limit orders down here around 135, maybe 138, and then stink bid down at 125 bucks. And Gold Royalty Corporation is up 17.8% for the week, so absolutely killing it. Is coming into a resistance zone right here. So let's say you've been prudent and you've been buying down here on pullbacks, right? Not a bad run. Let's see what we got right here. So from these bottoms here of 118, you're up 30%. Okay. Wouldn't fault anyone for taking profits here, right? Gold's at all-time highs. I think this still has a ways to run, and I think this is probably going to be a triple over the gold bull market. So I haven't sold a single share yet, to be honest. But you know, if you're a trader and you want to take some, run it. Garrett says, you probably have the most actionable channel I've come across. I really appreciate what you do. Thank you, sir. Thank you for the feedback, Garrett. I'm glad you like it. I love doing it. Origin Royalties. Okay, I think anything below $1 here is fantastic. We had a moment, and I was literally looking at my phone. I think I was at the gym or somewhere, and I'm like, oh, I need to buy some of this when I get home. And then by the time I got home, it was over $1. So missed the opportunity. Thank you for the Trump tariff relief that allowed me to miss that opportunity. So that was a bummer. We had to reschedule with Patty again. He was really bummed. So I think it's kind of a blessing in disguise. I think he was basically telling me that he'll have he'll be able to talk a lot more and make for a better episode when he can come on. So we rescheduled him. He couldn't tell me why. You know, I mean, I know it wasn't because he was, you know, going to be a best man in a wedding or something like that. It had to do with the company. Sometimes these companies, they go into what's called a blackout period. Like information comes in and they can't do any news releases. They can't do anything for a little bit because, you know, it could give some people an advantage over others. I think that's what's going on. And a girl can dream. I don't know. I'm just guessing, but I'm hoping it has something to do with the Altius arbitration. We'll see. Time will tell. We'll know when we get Patty on the show. Yeah, we'll see. All right, and Barrick Gold. My God, look at that green bar right there. Barrick up 16.5% for the week. So move the lines on a lot of these here. Move this one up. So first entry point now 1775. Then after that 1625. Stink bid at 1525. You know, I think that 14 one was just kind of a pipe dream. But just shot up, gapped up. I do not think that we have entered the fear trade yet in this. I don't think people are like, oh my God, the economy is going to collapse. I have to get into gold. I don't think that's what's going on here yet. I think we're still in the FOMO, the fear of missing out phase, right? There's no way we're in the terror stage yet of gold when tech stocks are still as high as they are, in my opinion. All right, and Newmont, absolutely fantastic, up 24.4% for the week, so just absolutely killed it. Okay, so just nailing it here on Newmont. You know, anyone that wants to take some profits here, I think a lot of investors have realized, you know, that the Q4 financials for these companies were when gold was $700 less per ounce and oil was $15 more per barrel. And diesel is one of the main costs in these mining companies. And, people are starting to wake up to that. So I think we got a little bit of FOMO here, probably going to get some correction. I mean, usually you don't have gaps like that where they just never fill, yeah, pretty incredible. But, pay attention to your RSIs here. They're getting up there. Monthly here on Newmont, weekly on Newmont is 65. Daily on Newmont here is 73. So wouldn't fault anyone for taking any profits, right? Okay. Agnico Eagle up 18.3% for the week. At some point you got to pay yourself. All right. And the way I think to play, especially these gold stocks, is you start with the majors like Barrick, Newmont, and Agnico Eagle, right? And then you move on to the mid tiers, and I kind of conveniently have them in these order, right? Okay, and then we go on to B2 Gold, Equinox, G Mining Ventures, and then after that you start getting into the juniors, right? So I think that's the order we're going to want to sell them in, right? That's why I sold GDX and not GDXJ yet. Okay, we started getting into these majors, way over here over a year ago, and past the point of concern. So every share that we own now is free. And at this point, Agnico Eagle is probably still a double from here, at least for this gold bull market. It might even be a triple. I don't know. But I like the levels here. Probably going to get a retracement at some point. I like $100 a share as a starter position, then 89, then 78. B2 Gold up 22.3% for the week. So was going to run another option on this one as soon as it hit $2.50, and we got within like a nickel of that, and it just never happened. So that was a bummer because, just an absolute run here. This is incredible. Let's say I didn't get it at 255. Let's say I got it at 260. Okay, so that's a 23% run in options world. That is several 100%. That would have been great, but oh well. Hindsight's 2020. I can see straight looking backwards. Equinox Gold up 13.5% for the week. So I'm holding this one for most of the duration here. This is a mid-tier, right? Like Agnico Eagle's worth, 40 billion or something. And let's see. Oh, wow, we're up to 60 billion. Okay, that's way off. It's gone up quite a bit. Equinox is worth like 4, right? Oh, no, 3. I swear I've done this before. So this is going to be one of the mid tiers, right? G Mining is going to be one of the mid tiers. We're going to hang on to these ones, I think, for a while until we get further into the gold bull market, and then we'll start dialing these back, and that's when the juniors are going to have their real run, right? Okay. So I like this one. Yeah, kind of ran away from us right here. Just wait for pullbacks here on the bottom part of this channel, or lower end right here on the rising 200-day moving average. G Mining Ventures up 20, is that right? 27.5%. Yeah, 27.5% in 1 week. Absolutely killed it. I should probably put in a little red line here as a starter position. I don't know where I'd put that. Maybe $12.50, $13, something like that. I feel pretty confident it'll get there, and I also feel fairly confident it'll get down here to 11. This thing's pretty leveraged. If and when gold gets a pullback, then these should get hit. So $11 and then $9.50, still like those. And Seabridge Gold, so up 25.1% for the week. I've been watching this one for a while and waiting for it to get to the $10 mark. And we went over companies so far that Rick has interviewed for the Rule Symposium this year, July 7th through 11. And we're doing charts on all of them in the Rule Classroom. So it's only available in the Rule Classroom. So if you want to see what companies are going to be in the Rule Symposium this year, and you want to see us pull up the charts and where I like entry points on these, then head over to theruleclassroom.com, or there is a link right down below. You just click on that and enter the classroom, and I love it because it's my favorite price. It's free, so I hope to see you out there. Now, this is one of the companies that we talked about, and I'm kicking myself for not doing exactly what I talked about and buying when it got down to $10. And I mean, look at this, is one of those companies that you don't need to be in options on, because in 1 week the darn thing went up 25%. That's like options world stuff, but this is just buying straight up shares. I even told Rody Frank about this when I met him on the boat cruise last year. And he was very curious about the technical entries. And I said, $10 looks amazing to me. And I mean, look at that. There's 10, 2022, 2023, 2024, and like 2 days ago. So hindsight's 2020. I guess I'm crying over spilt milk. All right, up. Rio 2 is up 19.3% for the week. Just looking fantastic. This cup and handle is playing out. I think this one is going to be fantastic. Limit orders. Actually, I should probably put a red one in here as, first starter position if you want into this at like 57 cents. Then 49, then 41 if you're buying it over the OTC. And silver is up 9.2% for the week. So $35 failed, absolutely collapsed down. And on Monday, it got all the way down to $27.55. So incredible. The sub $30 silver that we're talking about forever. You had a couple days with that to secure some silver. So hopefully you got some. I'm talking the physical stuff and also physical on the stock market, which we'll go over here in a sec. Massive sell-off, then quick rebound. Really, really cool. Gold to silver ratio. Gold underperformed by 2.1% this week. So silver outperformed by 2.1. Last week it was 103 to 1. So 103 ounces of silver to 1 ounce of gold. Now it is 101.7 to 1 ounce of gold. Here's your physical silver on the stock market at PSLV. So we've had this yellow line right here at $10 a share and then stink bid at $9.50. So this is a way you can play physical silver on the stock market. And I like that entry point quite a bit right there on PSLV at $10. So, you might get lucky and it'll come back down and touch that. So that's where you can set your limit order. And SIL is up 15.8% for the week. So this white trend line is, I think I said last week, small buys on this white trend line and then bigger buys at 32 and 30. Well, 32 and 30 never hit, but that white trend line certainly did. So congratulations, you are in. And look at the leverage we have here. So physical silver here, this is where you start your position, right? This one was up 5.7% for the week. And then SIL was up 15.8% for the week. And then if you want to get even more leverage and get into the silver juniors, this one was up 18.1% for the week. So unfortunately did not hit the green lines. So I'm SoCal sad boy right here. But got darn close. Okay. So first limit order was set for $9.75. And then the next one at $9. Got darn close to that. What did it get to? Got basically down to $10, $10.01. Pretty close. Sometimes I got a habit of just missing those. All right, and Pan American Silver is up 20.4% for the week. So super leveraged right here. Loving it a lot. I might actually trim a tiny bit here. Although it's kind of like, the last time we were up here, it was at 35, and now we're only at 32 or 31.90 on silver, and it's almost at the same level. So I think these are finally starting to play a little bit of catch up. I moved the best buy lines right here. So starter position, $24, and the next one at $22.50, and then stink bid at $19 for Pan American Silver. And speaking of silver, actually, we are going back to Mexico. So I got some positive feedback on the travel vlog. So we're going to do another one. We're going down to Mexico next week. So you can follow on our social media sites. We've got links on our YouTube post. If you go to the community tab, we've got Twitter, Instagram, TikTok, LinkedIn, and Facebook. And you guys can follow along if you want. Got a lot of positive feedback on the last one. So we'll see how the next one goes. Alrighty, and copper. Paging Dr. Copper is up 2.75% for the week. So still just buying copper on pullbacks. This is a pullback. This trend line here seems to be holding. It's not exact, but it's in the ballpark here and just seems to be holding right there for copper. Got super overbought or oversold. on the RSI, but still up a little bit for the week. Gold divided by copper, gold outperformed by 4% for the week. It takes 717 pounds of copper to buy 1 ounce of gold. And COP.U is up 8.6% for the week. So, like the limit orders around $7. Looks like one hit last week. And was that last week? Yep, on Monday. $7. Stink bids at $6. $6 is probably a pipe dream that won't happen. I couldn't remember the other ticker for it. Blaine, thanks for getting back to us. It's SPHCF, so Sierra Papa Hotel Charlie Foxtrot. And he says, I've made 5 different purchases of this trust on a Fidelity self-directed IRA account. I wasn't charged any extra on these transactions. Looks like Fidelity dropped the $50 charge on this one sometime after the first of the year. So we were talking for a while. Blaine was the one that found this discount. The discount's starting to close here. Now it's only 8.8 to close the week. But as you get closer down to 7, the discount will get wider. And assuming copper stays the same, about the same price. So yeah, play that arbitrage. But I think that window's kind of closing. Thank you for the update, Blaine. And COPX up 8.7% for the week. So this one buying on pullbacks here. You know, these are pullbacks. Just take the advice of Joe Mazumdar, Adrian Day, and Brian London and buy copper on pullbacks. Stink bids down here now at 32.50 and 29. And COPJ had some limit orders hit. Thank you, thank you. We got in, I like limit orders here on COPJ at 1775, 1735, and 1655, all of which hit last week. So congratulations, you should have a pretty good position now in COPJ in the Junior Copper Miners ETF. And Freeport is up 14.4% for the week, so it's still in a downtrend, right? But I just moved the stink bid line down here to 2770. Okay, that's basically just lining up with this last low right here for Freeport. So biggest copper miner on the planet, and or maybe BHP is. No, I think it's Freeport. Munduro Capital up 9.2% for the week. So came in. Let's see, where was it? Yeah, so it seems to be kind of. I mean, I don't know how much we can put into technicals on such a small market cap company. This thing's worth like 14 million, but almost looks like it's ironing out like a little bit of a bull flag right here. See how we can kind of do that. I might be trying to make something out of nothing there, but yeah, definite resistance on this one is going to be around 19 cents and support is around 11.50. And make sure you check out our free newsletter. And as the name would suggest, it is free. You may not have time to watch the content every week, to watch these videos every week. And even if you do, it's a great summary of all the concepts that we learned for the week. But don't take my word for it. Take V's. He says, I got your newsletter. It's very unique, and it was very useful to me personally. Thank you for putting it together. You're welcome, V. Thanks for the feedback. Link is in the pinned comment below, or go to stevebartonmoney.com. Alrighty, and uranium is down 0.1% for the week, so that's down 5 cents per pound per week, so basically flat. Getting very interested in uranium again. Okay, this hasn't happened in quite a while. Gold divided by uranium, the ratio was 47-1 last week. Now it's 50-1 this week. So gold outperformed uranium by 7%. Maybe swap some of your gold for uranium. And SRUUF up 4.9% for the week. So still 66.2 million pounds of uranium. Great discount right now. It's at 13%. Now is a buy. And I think I'm getting a little too cute here. I put in a limit order down here for $12.50, and we got close. We got $12.55. I think I'm just getting a little too cute. I need to move this up a little bit, but you know, whatever. I already have quite a bit of uranium, but I would like to get some more, especially when it's this cheap. And Cameco is up 8% for the week. So you got your limit order at $36. So that limit order hit. If you're new to the show, that's your spot. 36 stink bid down here at 33, 32. 32 I think is a little bit better than 33. I think I had 33 drawn last week. URNM is up 7.3% for the week. So also got a stink bid in down here. Got a little bit more, and then we put in a stink bid for $28 even, which has yet to hit. Where are we at? URNJ is up 11.1% for the week. So we're making history here. So put in the yellow line right now at 1367, and that was simply just some basically like a long double bottom that lasted like 2 years. That was basically the price. I think the price was 1366 and 1367. So you're pretty much there now. Now it's fine. But I think we may be coming in for a double bottom. We'll see right down here, and the bottom would be 1152. So maybe kick it up a few cents from there. And Uranium Royalty Corporation is up 7.5% for the week. So had a couple of limit orders hit. Last one was at $1.50. I got some more of this, and Rick has it ranked as a 4. Uranium Energy Corporation up 10.9% for the week. So I had a couple of limit orders here hit. The bottom one I got in for $1.12. We're looking at running a possible option on this one next week. We'll see. There's enough volume for it, and might be able to run some money on it. We'll see. But RSI got really overstretched there, down at 22. Great buying opportunity. And Andrea says, from now on, you are officially my chart guy. Thank you, Andrea. Great work. Keep sharing the knowledge. Traders need to work together, and more people should get educated on what finances are. I agree. Got an idea from a longtime listener, Adam, and I used to do this all the time with poker, and I don't know why I didn't think of it here. One-on-one private sessions. So maybe you just had your portfolio ranked by Rick Rule, and you want to add capital to existing stocks, but you're not sure on entry prices, or maybe you have 5 to 10 or a dozen companies that you've done some due diligence on, and you know maybe some future catalysts on, and you're really bullish on them, but you want some help with some of the entry prices. So if that sounds like you, let's do it. I think it'd be fun. I'll take the first 5 people that email me, so we'll do a 45-minute session, between 45 minutes and an hour, one-on-one video call session. We'll do it over Zoom, $200 American dollars. If you're interested, if that sounds like you, then email me, stevebartonmoney@gmail.com. I'm looking forward to this. This is going to be a lot of fun, and I'm looking forward. I think this is going to be a blast. I used to have a lot of fun doing this with poker, and I think it's probably going to be even more fun with stock charts. Okay, and crude oil, WTI, is down 0.8% for the week. It just had a massive sell-off here. I think this was part of the liquidity crisis. You sell what you have when you have to. Just got way down there, got down to 55.12 and then shot right up. So that's where I put the yellow line for WTI. Not that you're going to be betting on WTI exactly, but that's kind of where I see the first little floor possibly coming in for a little double bottom, right? And then Brent is up 1.4% for the week. I need to move this yellow line here. I forgot to do that, but I would just move it right down to the bottom of this one. Actually, I'll just do that now. And somewhere around right there, like 58.50, somewhere around in there. And gold divided by crude oil, it now takes 52 barrels of crude to get 1 ounce of gold. So gold outperformed by 7.7% this week. And XLE is up 0.2% for the week. Not much there. Our fourth limit order finally hit after a year. That limit order was at 79.75, I think. Yeah, 79.75. Got even cheaper than that. My next order, I wouldn't have been able to resist myself. Not on this one, on Exxon, but I think now is fine. We might actually have a little bit of a breakdown in the charts here. So I got a feeling we're going to get some cheap oil. I think it could get even cheaper. And so I think we might get some real deals here. Now, a lot of these here are not trading vehicles. You know what I mean? Like what I was talking about with Seabridge Gold. not applying to gold or not applying to oil here. These are more of like your retirement kind of buy and collect your dividend forever, pass it on to your grandchildren type stocks. That's the way I'm looking at a lot of these oil stocks. These are like 3 to 5 years minimum to hold, and I'm not going to be selling any unless we get some absolute runaway in, like when the crude oil price got up here, to $130 a barrel. I had bought some when it was free down here at -30. I sold a lot up here. If we get a moment like that here in crude oil, then what I'm saying right now is negated and it's off. We're going to be selling. We'll move way past the point of no concern. But in the meantime, I think we need to look at these as a long-term hold. All right. And XOM is down 1.2% for the week. So sometimes I get a little too cheap on this. I was looking at this when it was down here in the 98s and 99s. And I don't know, I guess just because I got it back here. The number I had in my mind was 96. And I'm like, okay, if it gets to 96, I'll hit the buy button. Never did. Probably should have, could have, would have, didn't do it. Chevron down 5.3% for the week. So last week, yellow and green lines looked like pipe dreams, and this week they hit. So absolutely incredible. So your 41.25, we can afuera that thing. That one hit. And then the green line down here at 135, that one hit as well. I had it at 135.63, just lining up with this one. Boom, got it. Low RSI, low MACD. Yeah, looks like a fine entry point to me. And C and Q down 1.5% for the week, so it's still in a downtrend here. I think it was 26.50 was the one that we had last week. Blew through that, just touched right here. I think 25 is a good entry point right now. It'll probably get there. And then after that, $23 lines up with some nice support right back here. Blackstone Minerals up 0.3% for the week. So at $14, the dividend is $10. At $14, the dividend is 10.7% annualized. Got all the way down here into the high 12s, and I just missed it, or I would have got a little bit more. I was busy with a lot of other stocks. Yeah, fantastic dividend here. It looks like it's sustainable. We'll see if it is. Natural gas is down 8.1% for the week. So this trend line is still being obeyed right here. It dropped like we thought it would last week, but it's looking like, I think this week it's probably going to bounce and go up. And Jason asked, he said, what platform are you using for charting? Well, look no further, sir. This is TradingView. This is our favorite charting software. There will be a link down below if you want to try it out for free. I thought that you get like a 1 month free trial period with this, but apparently you can use this thing for years without paying. Now, you don't get all the indicators I have here with the RSI and the MACD. You got to pick like your favorite 5 or something like that. But my brother has apparently been using the software for years. And so you can do the same thing if you use the link down below. And thank you in advance for using that link. If it turns out that you wanted to get the paid subscription and get all these cool indicators and keep track of all these stocks like we do, then it's really not that expensive. I think I get the annual version and it comes out to like 40 or 50 cents a day. It's pretty cheap, especially how are you going to know when to buy these things unless you have the software, right? Okay, Devon Energy. Okay, this is where I put the money from GDX. I rotated it into this one, and I actually bought some more with a little bit of cash. This is just absolutely getting stupid cheap. We talked to Rick about this one, and he's like, yeah, it's cheap. Really, really cheap. Got to have a long-term outlook on this one as well. 3 to 5 years for Devon. They pay a little dividend along the way. They do got some debt, but that's getting paid off. And yeah, I don't know. I think it's getting cheaper. I've got the lines drawn right here at, what was it, 27.50, and then a stink bid down here at 18.25, which is probably a pipe dream. But I just lined it up with some back support here in February of 2016, and I don't think it'll get down that low. I should probably raise this up to like $20 or something. But you never know. In a liquidity crisis, this is why I still got like 16, 17% cash, because you get a Charlie 19er right here, And I mean, Devon, pre-Charlie 19er, let's just zoom in on this and see what it did here. Okay, I mean, you had a massive gap down right there, right? Just before it, look at what this percentage move is here. What is that? 75%, something like that? I mean, just massive move to the downside. What if the same thing happened here? What if we got a 75% move down in Devon? Where would that take it from where it is now? Let's just pontificate here for a moment. Oh, wow, we're going to need to go way out on the charts. There it is. That would take it around $7. Wouldn't it be nice to have quite a bit of cash to be able to put it in something that, I mean, unless you're going to stop cooking your food with natural gas in your house, like this company's going to do really, really well. All right, and where are we at? We're at Woodside. That one is up 7.1% for the week. So still falling out, but it had a nice bounce this week. And Birchcliff came right into the next buy zone right here, just down all around it. You had all last week to get it. Had it at $4, but you could have got it for a lot cheaper than that. Next limit order down here for $3.15. And Pado up 3.5% for the week. So your limit order at $10.65 hit again. Congratulations. So new guys here, you got your limit order in there for $10.65, shot right up. Look at that. Next limit order down here at $9.75, and then a true stink bid, which will probably never hit, at $8.25. Coal, thermal coal up 1% for the week. Met coal up 2.8% for the week. I asked Matt Warder about this, and he basically said that it looks like Trump is gung-ho on thermal coal, which will be used for power plants to power these data centers, and not so much on met coal, which will not do that, which will make steel. But if we're bringing steel back to the U.S., he thinks met coal is probably a later story, and thermal coal could be a little bit more near term. So maybe focus more on thermal coal than on met coal. And our favorite coal ETF is up 9.7% for the week. So we had some money come into this. We now have 12.2 million assets under management and 780,000 shares instead of 700,000. So money's coming into there. Probably should have picked up some, well, now that I could see the future, yeah, I should have picked up some more last week. Glencore is up 13.7% for the week. Got a little dividend coming up here. That might be a moment in time for you. Picked that up week before last, around $6, I think. It closed the week at $6.82, up over 13%. AMR up 9.4% for the week. So I don't know where the bottom is in this. I think I got frustrated and drew the green line where I saw the most support right here, and that was at $79. So just absolutely getting crushed on this one. BTU. So I don't own any of this, but I like to use it as a trading vehicle, and it looks like last week would have been an amazing trade. I don't know how you would catch that, though. Up 21.6% for the week. Looks like we got a bit of a bear flag right here, and it might actually go down a little bit more. I will draw it for you guys here. So we got bear flag like that, and then we can take the measured target, and we basically take the pole down to there, and then we extend this down to here. I mean, this could get stupid cheap. It could get down to $6. I don't think it will, but it might. And this is one of those hybrid ones, it's got thermal and met, but I think they're more heavy thermal now than they are met. So maybe it'll pay out. All right, and platinum is up 3.3% for the week. So finally hit the $900 mark that we've been talking about forever. Last time it was here was a year ago. We touched on it almost, several times, got within a few bucks of it. But here it convincingly broke through. So hopefully you got yourself some platinum. And PPLT was the way to play it on the stock market. I was off a little bit in my calculations here, and it's kind of tough to my own credit here. I thought $900 platinum would be $82.50 on this, and it got down to 83 something. What was that? 82.79. So it got within 29 cents of it. It's kind of tough to tell when they're issuing shares and all that, but anyways, close enough. So hopefully your limit order hit right there. If you had it at exactly 82.50, it did not, but hopefully, anyways, My bad. I'm bad at math, apparently. Next one down is going to be 80, and the one after that, the pipe dream, is going to be 75. But yeah, like that a lot. It may come back down if Lobo's right, and this is an industrial metal, then it should get hit even more for the coming recession. And Palladium down here in the 900s, this is where you want to do it. And PALL is down 0.2% for the week. Palladium was down 0.1. Starter position, so this one I got the math right, 83, and then $80 for a stink bid. And SRUUF, both platinum and palladium, one-stop shop for Sprott. I gotta take a drink of water. This is a long one. Up 2.3% for the week. So if you want to run a trade on this, I like this $9 level quite a bit, or just stack it for the long term. I've got enough here that I'm ready for the reversal. I don't really want to get any more. Maybe I should have played this as a trade, but anyways, $9, $9.75, and then stink bid down at $8.25. Platinum divided by silver. This is why we're doing it. Platinum is historically cheap compared to silver. Ratio now is 29.6 to 1 ounce. And gold to platinum ratio is super. I mean, 3 ounces of gold for 1 ounce of platinum. The ratio now is 0.291. I mean, just absolutely incredible. Cheapest I believe it's been in recorded history. Okay, and nickel futures up 2.2% for the week. Fell below 15K. I didn't see that happening, but it got all the way down into the low 13,000s per ton, and then shot back up. Maybe we found a bottom in nickel. My suspicion is we have not. NIKL up 0.6% for the week. Establish a position in a hated commodity. I think I need to get just a little bit more of this one to balance it back up. And Centaurus Metals is down 3.8% for the week. So kind of fell out of this channel that we had here. You know, I can kind of adjust this a little bit. You know, I mean, this stuff isn't exact, but you do want to try to hit at least 3 points on either side of these channels here, you know, so you don't want to just arbitrarily draw this thing wherever you want. But either way, this is getting pretty cheap. And I think that if there is what do you call it? If China is, you know, if these tariff little, you know, peeing contest continues to go on with China, then, you know, we may actually ban Chinese nickel, which would be really, really good for this company because it's down in Brazil. It's not in China. And the Bloomberg up 1.8% for the week. So established a position in that one last week. Didn't catch the bottom, but, you know, better than 108. And iron ore still kind of staying flat around that same $100 range or so. Down 2.2% for the week. Still kind of in the middle of the trading range. BHP got a little bit more of that just before it shot up, so that was nice. And that is up 7.6% for the week. Rio Tinto, same kind of thing, up 4% for the week. I like limit orders down here at 52, and then a stink bid at 48.75. Pick ETF, I just picked the bottom right there, is around $30, and it did line up with quite a bit of back support as a stink bid, and then a real stink bid down in at $28. So this is a one-stop shop, easy one for all of these BHP, Rio Tinto, Freeport, Glencore. You know, you get a combined dividend of all of them, really nice. And China ETF down 0.6% for the week. If we're going to make a move on this China ETF, I think it needs to be relatively soon before they make a deal, right? I'm sure they're going to make a deal. I mean, we get so much of our stuff from China, I can't imagine them not. This was a nice little catch right here on $45. Stink bid down at 41. I'd like to see it come back down for a double bottom on 45, and I probably will not be able to resist myself. This is one that Rick and I were talking about, basically shipping. I can't remember if we're talking about it on camera or not. We did an interview in the Rule Classroom last week, and that might have been where it was. Anyhow, looking at it on the charts, looks like it's coming in for a double bottom. I think Wednesday was the tick if you could catch it. Yeah, it was. Came in for an almost picture-perfect double bottom and then shot up. So I'd like to see the MACD turn up a little bit more, but beggars can't be choosers. And yeah, getting pretty cheap. I haven't followed this one a whole lot. I know you guys were writing in about this one, a couple of years ago, and then it just had this massive run here. And I never ended up playing this thing, but I mean, it went up almost 200%. Might be something here again. This shipping issue isn't going to last forever. And when it does, I think this one will benefit from it. And Bitcoin up 9% for the week. So recording this on Saturday, we'll see what it ends up being tomorrow when this airs. But kind of came in for a double bottom, came in right here, made me a little nervous because it pierced the balloon, pierced the 400-day moving average, kind of came down a little bit, but we do have a bit of a divergence here. So look at how low the RSI got back over here, but look at where the price action was. Okay, so it got down into the 26, 25 range on the RSI. Then the RSI got higher, but the price got lower right here. And then same thing happened again. Price got lower, RSI got higher. So I think we're going to establish an uptrend here in Bitcoin for a little bit. Immediate resistance, we got the 200-day moving average, then we got this $92,000 level. But yeah, look at the histogram here on the MACD. It looks like it's going to angle up. Zanzibar says we're going to stay frosty. We're going to buy low and sell back to the current panic sellers. When they become panic buyers, we are going to win. Well said, sir. Thank you guys for being here every week. Love you guys. Again, I'll be in Mexico, so stay tuned for the travel vlog, and we'll put up another video and follow along there. And yeah, support the show. Be sure to share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.